All right. Okay. As they usually say, third time is a charm. So hopefully we can keep on going till the end.
Get past this technical minority.
Might happen. It's all part of technology today. So thanks for all the viewers and listeners and for their patience. I'm sure that you were looking forward for a lot of information. So let's go right back into it. We were talking about equities in terms of long term. It's usually where you get the best return. It's also the most risky type of define risky compared to crypto, but it's one of the riskiest types of investment that you might have, and depending on your objective, your age, you might have to reallocate some of your assets in different portfolios. But just going back to one of the questions they had is, do you have any options for equities on a local market here on Aruba? What do you think about that? Or do you have any information that you can share regarding local equities?
Well, yes, sure. There are local businesses that you can buy into, and I do believe could be a very interesting market. But then it's also an over-the-counter way of doing business.
Right.
So you have to know someone who is willing to sell part of his business to you.
Right.
There is a market for that. There are entrepreneurs that are getting at a certain age that they want to stop. They want to retire.
Right.
And that not necessarily because they have a bad business. There are actually quite a lot of flourishing business in Aruba.
Yeah, true.
And maybe they don't have a good person to succeed them, and then they will sell their business at a good price. Yeah. You can get a good price. And actually, we at the university we have a investment club, the ISQA, the Aruba Investment Study Club.
Okay.
And we have 3 pillars. So one is stocks, one is cryptos, and one is local investments.
Okay.
So
Interesting.
So we're looking into that, how we can also for ordinary people in Aruba who want to save some, invest in local businesses to get a fund to buy local businesses.
Okay, because let me tell you one thing that I do see, and it has a little bit with crowdfunding. Separate from that, there are 2 organizations here on the island that do sell local equities, but I think they're mainly reserved for institutional corporate type customers. So they're not available, I think,
to the public.
To the public.
Yeah.
To the best of my knowledge, but I know that a couple of those organizations do exist. Now, going back to what I wanted to say is, I think it's interesting because I think there's a lot of people, 2 things. People wanna have an alternative to invest, for example, in local equities. By the same token, there's also people that need funding for their business because they have a very good idea, but they cannot get it off the ground because financing is not possible unless you go to the banks and you have strict collateral. Yeah. You do have credits, so there is that option now. But separate from that, if you go to a higher amount, you don't have that possibility. So I do see that there's a gap there in terms of people that want to invest and people that need funding.
Yeah, there is a demand for that. Yeah, sure. Yeah, there are entrepreneurs looking for funds to invest, and there are investors willing to invest locally because there are good businesses out there that can give a good return at a reasonable risk. So yes, sure, there is a market for that, and as you said, there are for the institutional markets, for the pension funds, for APFA and for the AIB, etc.
Right.
They have their funds, but they are looking at the bigger deal.
Yeah.
They are looking, well, for example, I remember a couple of years ago, Radisson, the Hotel Radisson was bought by a local investor.
Right.
And there are more of those.
Right.
It's now the Hilton. There are more of those type of investments.
Correct.
But that's really the big market. Those are what we call the large caps.
Right.
On the bottom side, you have indeed on the bottom side, let's say in terms of loan value or investment amount, you have Qredits, which is helping, but that's mostly indeed for starting companies.
Right.
But there are also in between. There are also many small companies that are looking to attract funds.
Or
Or as I
expand.
said,
Right.
expand, or they may say they want to retire or whatever.
Right.
So yeah, there are definitely opportunities.
There are opportunities, and I wonder how I don't want to use the word public, but how would you create the connection between someone who wants to invest or has the opportunity to invest with companies that are looking for investors?
Yeah.
So that maybe that.
Yeah, I think that we've thought about those issues also. Maybe we thought about doing like a thing like, for example, a Shark Tank event, right? So those are the things we at the investment club are also looking at. That you have a number of entrepreneurs pitching their idea, and then we also have a number of investors, and they can connect. But on general, at this point in time, I would say it's really a lot of the deals are done of people that know each other.
Right.
You have
exactly.
to be in a network.
Correct.
Yeah.
And that's the way it goes now. And but
Okay.
we also have some people that are quite well in those networks.
Mm-hmm.
So yeah,
Okay.
yeah,
Or maybe it's time to make Shark Tank Aruba edition.
yeah.
Don't say it too loud. Just picking my brain already. Jordan, what can you tell us about the portfolio attitude that you would have before COVID, during COVID, and now? How did that change? What information have you guys have been able to research or obtain to tell, you know what, maybe before we would do this and this, but now, I don't know, for example, and I'll give you an example, right? Because personal example that I was thinking about, COVID hit, right? Bunch of stock markets, of stocks rather, crashed downwards. For example, airfare, travel related, cruises, that sort of things, everything that's related to travel and leisure. So obviously they're down. So obviously you want to buy, right? Because eventually that they're gonna pick up. You just don't know when.
If they survive.
Right. If they survive, which is obviously another important matter, because you need to research and make sure that the one that you're gonna be investing in, you do your due diligence. So what can you tell us about pre, current, post?
Yeah. So a big difference between now and during COVID and post COVID is that at this point in time the big theme is inflation. So obviously inflation is running rampant, and that has all kind of consequences.
Okay.
So be aware of that.
Okay.
And in general, some rules are almost always true. Like for example, and you probably heard of a guy named Warren Buffett, who is a very
correct.
well-known investor.
Yep. Mm-hmm.
He always says, "Be fearful when others are greedy, but also be greedy when others are fearful." In other words, when everybody is panicking,
Right.
that's mostly a good time to buy.
Right. Exactly.
And when everybody's lulled to sleep, then be careful and put some of your money aside.
Right.
And that also was very clear in the COVID
And
era.
that's exactly what I'm referring to. COVID, everybody panicked.
Yeah. And
Boom, crash the prices.
Yeah.
Well, I think the richest,
Yeah.
I think that's when they bought.
Yeah, yeah, and bought, and what you should have bought with the companies that did really well were the tech companies,
Mm-hmm.
because everybody went to Zoom, everybody went to using Google, everybody's at home, Facebook.
Right.
Those companies flourished.
Mm-hmm.
Whereas, for example, so I would say at this point in time, maybe it's I wouldn't look too much at those companies because they're very popular already. Everybody has them in their portfolio. Maybe it's better to scale them down at this point in time.
Mm-hmm.
And the companies that were very unpopular, like indeed, as you call the leisure companies, but also the energy companies. Oil was really, really, really low. So oil actually went almost negative in the future during COVID. A company like Shell, you could buy it at 10 euros, which is utterly low price, a ridiculously low price.
Mm-hmm.
And now they're very cash generative, and I think the price is 24. So I wouldn't chase it too much now, but
But still, if you bought it at 10 and it's at 24, you made 100% return.
yeah. So
Yep.
yeah.
Yep.
So be contrarian, and so that's the important thing. Be contrarian, and I think also what's important to know, everybody is now talking about inflation, and rightfully so, because inflation is there, and probably it's not yet totally discounted in the stock market, but it is getting discounted more in the bond market. You can see when you look at the structure of the bond market is expecting a lot of inflation now for the coming 2 years.
The bond market.
Yeah. So
Okay.
yeah, I would say the bond market, when you look at macroeconomics, the bond market is more cleverer than the stock market. The stock market is very much focused on sectors and individual companies, whereas the bond market is very much focused on macroeconomic themes,
Okay, got it.
growth, also much on government authority policies,
Right.
interest rate policies, tax policies, etc. So my experience is that in general, the bond market knows better what's coming, signals better what's coming than the stock market. And the bond market is now what we call you have a yield curve. You guys know yield curve is maybe a little bit
You took me a little bit back to my corporate financing days in college.
Hard copies.
Huh?
Hard copies.
No, it was a book.
Okay.
It was a book. It was a book. I have a minor in finance too, by the way.
Okay. Tell me. Yeah.
Yeah. So you were saying about the yield curve.
Yeah. So the yield curve depicts the different terms of the bonds. So you can have a bond, a loan. For one, when you go to the bank, you can get a loan. Or you can borrow for 1 month, or half a year, or 1 year, 3 year, 5 year, 10 year, 30 years. And for each of those terms, you will get a different interest
rates. Correct.
Yeah. And that's also the way the bond market works. Each bond has its own interest rates.
Right.
And normally, when a rate is when the term is longer, you also get a higher interest rate. You get a higher interest rate. So let's say when interest rates for a 1 year bond are, let's say, 1 year, then normally an interest rate for 30 years would be, let's say, 3% or 5%.
Yeah.
So the longer out, the higher the interest rates. But it's not always the case. There are some instances that the bond rate is what we call that the yield curve which depicts the different yields that belong to the certain terms of the bond. When the yield curve is what we call inverted, then you have the short-term rates are higher than the long-term rates.
Because those are depending on the macroeconomic factors, or
yeah. So it depends on what the bond traders expect in the short term of the central bankers to do, because that's how the short end of the curve is established, and what they expect for in the long term for inflation. Because that's what in 10 years, then the yield on the 10-year bond is determined with what do investors expect inflation to be in, let's say, 10 years.
Okay.
So when you have a high short term interest rate and you have a low long term interest rate, that's what you call inverted yield curve. It's a kind of abnormal.
Right.
And it indicates that the investors expect the central banks to hike interest rates in the short term quite substantially.
Because that's why it's high. Yeah, correct.
But then in the long term, they expect them to drop. So at this point in time, you see that the interest rates, the yield curve is not yet totally inverted, but it's really very close. So the difference between the 2-year bond, so a bond which has a maturity of 2 years, and a 10-year is now only 24 basis points.
Wow, that's almost nothing. Yeah, almost nothing. Yeah, very close.
And that indicates when everybody is now thinking we're going to have inflation, big time forever. The bond market is indicating in the long term probably this
inflation will stabilize, drop back.
Yeah.
I have a question here. Can non-students also join the investment club at the
Sure. Yeah. Everybody's free to join. Yeah.
Okay. We'll share your information or what is allowed to be shared, or you can send a message and then we can exchange information.
Yeah. Sure.
When needed.
Yeah. It's actually every Tuesday, the first of the month on Tuesday. Then at 8 o'clock we have a meeting.
Okay, at the UA.
Yeah, at the UA, yeah.
Okay, all right. Well, there you go.
Yeah.
Very good information here shared on FLORIN TALK, naturally.
Of course.
We were talking about equities, stocks, bonds. We talked a little bit about crypto, and maybe we can delve into the other types of investment possibilities, real estate maybe. I don't know if there's any
Yeah.
information that would be valuable to share.
Yeah.
I do have a question later on about other types. I think annuities was also one of them. And what were your thoughts are on those types of investments?
Yeah. Well, what I can say in general, so as I told you, it's important to diversify.
Right.
And so some of those asset classes, the typical assets, are very well available in Aruba. Like, for example, most people have a house, so the real estate part is covered, and it's always a good investment. To have your own house is always a very good
But
investment.
is it owning a house an investment, or is it when you use it to...
That's a different thing, because when you already own a house, and you take another house, for renting out,
Right.
then you have to look at that, on a case-to-case basis. But then you are quite heavily into real estate.
Okay.
So be aware of that. I don't say don't do it. It can be a very good investment, but be aware that you are maybe, I don't know how big a percentage of your assets is then in real estate.
So if I'm understanding you correctly, saying even if you own a house and you have a mortgage, it's part of your portfolio, investment portfolio.
Absolutely. Yeah.
Okay.
Yeah. And
Interesting.
yeah.
Because usually, I don't think we have enough time to discuss about that, but usually there's different theories about it, that when you own a house, it's actually a liability because it's not generating any income. So the question is, how come it's considered an investment?
Yeah, but how do you mean? Well, you could see it as then you save on your what otherwise you would have to rent.
Mm-hmm.
Yeah.
Okay.
Yeah.
Okay.
Yeah. And the good thing about it is the bank is paying for it. So
true.
the bank is investing with you,
Right.
and you can deduct some of the
Okay.
payments.
What do you think about so separate from that and the investments as a whole here on Aruba? Is that something that is worthwhile to do at this moment?
Well, that depends on case by case.
Okay.
So obviously, some businesses are doing very well. Some businesses are doing extremely well.
Okay. The only reason I ask is because I see an incredible boom in terms of different entrepreneurs that are investing in Airbnb.
Yeah.
And a lot of potential new business people also want to invest into that new venture.
Yeah.
And
So-
if we're talking about that boom, I mean, that boom is not even 3 to 5 years, and it's a rather exponential boom. So people are interested in that, and
Right.
they sell.
Right, and that is the question.
Yeah.
So,
Yeah.
what are your thoughts about those
Yeah.
types of investments?
Yeah, it could be very interesting. And I also see a lot of new apartment condominiums being built.
Right, correct.
So, well, obviously, if you're at the right location, in the end, real estate always maintains its value. In the short term, maybe I would look at how the market is.
Okay.
Yeah, because and certainly with regards to Airbnb, there is, of course, I think at this point in time, the government is quite lenient.
Right,
But it could be that in some point in time that they will become more strict.
right,
And that, of course, will have an impact on your return.
right, right,
So also be aware of that.
right. What
Not
we've
without
seen here, at least for the foreigners when they come and invest here, for example, a real estate, a condo, or whatnot, to rent it either short term or long term, they require them now to register at the tax department.
Yeah.
So they don't have a choice.
Yeah.
It's the locals that's like you were saying, it's a little bit more lenient, but I think that's gonna be less and less lenient, especially with the landenpakket.
Yeah,
And also
with all the reform coming up. So
Yep.
Yeah. In Holland, you see that already. In Amsterdam, the government is quite strict on
Okay.
Airbnb lending. In general, what I could also say is that, as I said, be contrarian. So when there is a lot of money coming in from Canada, from the US, investing here, then maybe their prices are a little bit elevated. And it's a wise thing for the locals just to wait a little bit until they leave again, because markets will crash
got
at
it.
some point in time. Real
Right.
estate will also goes in cycles.
Right.
And when they leave again, that's
But-
definitely a good.
Right, but I think
find
what's
bargains.
happening is the foreigners, they invest in condos. So, the ones that are constructed at the hotel. And what the locals are doing, they are doing their own construction
Yeah.
of apartments, smaller condos, not really condos, but smaller apartments so that they can rent. So, I thought that was interesting.
Yeah, I think in general, what I noticed about real estate on Aruba, It's not really expensive. If you compare to other islands, it's not expensive. And actually, the prices don't.
Other
move.
islands in the Caribbean, or
otherwise,
okay.
It's not very expensive, but it probably will not become very expensive also. So the big part of the return is probably more the income, so the rental income, than the price appreciation.
Okay.
Because the rental income is generally quite okay.
Okay.
But if we look at the current situation worldwide, number one, supply and demand, and the supply chain issues. If we tackle and include the issues going on in Eastern Europe, those would eventually have effect, or already have an effect,
Absolutely,
on all those.
Yeah.
So it's something definitely, if you are thinking about investing or going into that way, those are areas that one really and truly needs to go more in depth into.
Yeah, I think in general, so what you see now is when you look macroeconomically, then Wall Street analysts are expecting like 2% GDP growth this year for the US.
Yeah.
I don't think they're going to make it. I think that we are on a trajectory for maybe even for a sharp slowdown in growth, and maybe even a short recession again. That's also what the bond market's indicating, and that of course will have repercussions for all the other assets. So stocks will be affected, global stocks, and also in Aruba, Aruban assets will also be affected. Yeah. So maybe what I'm saying is maybe at this point in time, it's not such a bad idea to keep also some of your money cash and wait for
Keep
the
it cash.
Yeah, a little bit.
Okay.
Cash or in the bank?
I'm like half cash now.
Okay.
I'm half cash, waiting for the right opportunity.
Right. Okay. Yeah.
And the opportunity, I gradually, I'm seeing opportunities every once in a while. I'll pick a little bit, and when it rises, I sell a little bit.
Right.
But be nimble, be flexible, have some liquidity around.
Okay.
That you can, when the real opportunities are there, and I expect that actually maybe in the second quarter. So let's say from April to June.
It will pick up.
Yeah, now maybe we'll get the bottom.
Okay.
Maybe we'll get that it will be clear that economy is really slowing down. And then when the economy really slows, then also probably the inflation, then demand will also slow down. And when demand also slows down for all the commodities, for oil, for copper, etc., then those prices will come down, and it will be clear that inflation will also, in the end, not be as rampant as it is now. And that may be the time that the central banks step in to support the markets again.
Okay.
And then we're off to go.
That's globally. Or that's in Aruba.
Global, but that will have same ramifications for Aruba. In
Okay.
Aruba, then it's the Aruban economy very clearly follows the U.S. economy.
Now, the only question I have regarding that is that they're going to be introducing a new tax system in 2023. Will that have an effect on the market?
Yeah. I think that will always have an effect. Yeah.
Okay.
And I think also that they are raising the BTW. Yeah.
Okay. What can you tell us about annuities?
Annuities. You mean annuities from the bank?
No. In terms of you have pension plans, right? That are offered by the different insurance companies here on the island.
Yeah.
And they, but it's not only life insurance policy, but it also includes a savings component, and they sometimes guarantee a specific percentage, which more often than not here, it's better than the bank.
Yeah.
Having lived in the States, I never saw that product. They only sell term life insurance. So you reach a certain age, what you paid, if anything didn't happen, you lost that money, or you may have a complete life insurance, which goes all the way until something happens. But here in Aruba, some certain companies, they offer the savings component, and I thought it was an interesting product that is being offered.
Yeah.
Is that also an option that people should consider?
Yeah, sure. I think definitely, but you have to be aware. Know that the company you are dealing with is under the supervision of the central bank.
Okay.
That gives a lot of certainty.
Okay.
And then yes, if you get a higher interest rates, then I should definitely consider that. But I also in Aruba, what's maybe sometimes overlooked, Aruban government bonds are actually
they're pretty good.
No, they are
Relatively
they
speaking.
give like 5% interest rates.
Sometimes
Well,
higher.
Yeah. Where do you get that?
Yeah.
Yeah.
I think there were sometimes they were offering 675 at one point in time.
Yeah.
Yeah, the only problem is they sell out too fast.
They sell out too fast.
They sell out too fast because the corporate customers they purchase them
Yeah.
and there's anything left to
Yeah.
the individuals. But I've seen those too. Yeah. True.
They're of course not equally safe as the U.S. government bonds. There is a
Right.
there is a little bit of more risk.
Mm-hmm.
But I think the extra return more than compensates for the extra risk.
Correct.
Sure. Yeah.
Correct.
Yeah.
And just for people to understand, more often than none, at least in theory, and yours is the professor, so he can correct me if I'm wrong. More when you have a higher interest rate, it usually means that it's a little bit riskier too. So that's why you're paying for that premium. Now, obviously, that's when you need to get that balance in terms of what is high enough that I can accept a higher risk compared to the risk that I'm taking. So for example, there's going to be some stocks that will offer you, I don't know, let's say just something crazy, 12% rate of return.
Yeah. On paper.
But on paper, they might go under.
Yeah.
And then you will not be able to recoup your investment.
Yeah.
And sometimes there's something a little bit lower. It's maybe 6, 7, but they have a good track record. Their cash position as well. The outlook looks positive, and even though you might be getting less return compared to the other one, but still it's going to be a little bit safer. So that's the interesting in terms of also investing, right?
Yeah. So that's so risk and return are two sides of the same medal. So generally, when you have more return, you're also going to have to take more risk.
Right.
However, in generally, I would also then advise people on Aruba and everywhere in the world, if you're not willing to do a lot of work, because it's going to be a lot of work investigating all those companies yourself,
Right.
then just buy an index. Right, just buy a lot of safe companies, and you get a decent return. Anyhow, you get 8% on average over a very long period. That's a good return. But if you really like it and you want to invest a lot of time in researching companies yourself, then you can also find companies with relatively little risk that give a higher return.
Yeah.
Yeah, but then
Right.
that will give you a lot of. It will give you. You have to put quite an effort there.
Now go ahead.
But one point to add on that, you're gonna have to do a lot of research beforehand. But if and when you decide to invest in it, you're gonna have to spend as much time following up and making sure that the company is doing accordingly.
Yeah.
Making sure that the investment that you put in is making ends meet. Let's put it that way.
Yeah. It's an ongoing process. Things change.
It's not only
Prices
it's
change.
also not only research, but you also technically you need to attend or try to attend and follow the investor calls that they have quarterly. Follow up on their financials, whether they hit market or target or not, what their future plans are going to be.
Yeah.
So that's what Jordan was talking about, that it takes time if you want to do it completely on an individual stock basis.
Yeah. So I like that. So
Right.
I do it all the time.
Right.
But I can imagine that a lot of people have
Right.
have other priorities.
Right.
And then it's better to buy just an index. Also, another thing that I would advise people is look at where you as a person, and everybody has different qualities, where is your edge. So, for example, maybe you are you're accountant, you may know something in the accountant world. Huh?
Right.
You see that other people know a lot about macroeconomics. They're very good at feeling what the governments are going to do. They're
Right.
very good at feeling what currencies are going to do, what interest rates are going to do, what inflation is going to do, those macroeconomic themes. Other people are very good at certain sectors. Right, for example, and you have people that really specialize in oil, that specialize in the Aruba. You've got people that specialize in hospitality, maybe in airlines.
Right.
So find your edge. What is an expertise that you could excel, that you could be better informed
Right.
than.
You might as
general
well make use of that information, the
Yeah.
expertise that you have into the
Yeah.
to the market.
Yeah, yeah.
Now, one key question, because we keep talking about market, stocks, bonds, funds, etc. But how can you invest here in Aruba?
Yeah, that's a good question, and that's a question I get a lot. Because obviously people are sitting with the problem that they have a lot of money in the bank and they want to do more things. So with regard to stocks, we are currently at the university. We have some students that will investigate that as their theme for their final thesis.
Okay.
So I'm looking forward to that.
Oh, interesting.
Yeah,
That's very interesting.
and we have of course the investment club.
Mm-hmm.
So we come together on a, let's say, a monthly basis, and we decide. We have an account at First Trade.
Mm-hmm.
It's an American stockbroker
Right.
that can invest almost globally.
Mm-hmm.
Yeah, and I know there are some brokers that you can open an account yourself from Aruba.
Right. There's a local institution here in Aruba that has an investment department where you can go there and you can invest there.
Yeah, some banks offer it, but I think most of it is going through Curaçao.
Mm-hmm.
So it's a bit it's not very straightforward.
Mm-hmm.
But also there also you can open an account at other brokers. But it's not very easy, and generally it requires some minimal funds that you have to deposit.
Yeah. Okay.
So yeah, there are some barriers there. Yeah, and we're looking how we as an investment club can serve the rural community for people that want to have more easy access.
Okay.
Yeah.
Okay.
Nice.
Interesting. Now, do you guys have? So, what would, if I'm a person, right? I have funds available. What is the first thing? How do you recommend that I go about and prepare myself for diversification of assets, or how I should start and preparing to go invest into the different asset classes?
Yeah.
And how much each? What should I consider?
Yeah. Yeah, well, that's depending on the amount you have. But in general, I would say start buying your own house. If you don't have a house yet, then start buying your own house. If you are know that you're going to stay in Aruba, then first buy your own house, because that's far more attractive than renting.
Okay.
So that's the first thing. Second, keep a little bit cash at the bank is not a bad idea at all. Not too much, but keep at the bank is good.
Okay.
Further, then you get the other the stocks.
Right.
I would say stocks. If you as I just said, if you have enough funds, then you can open an account at a broker.
Yeah.
Yeah. Or you can do it via bank. But if you do it via bank, then I would definitely advise you to get yourself a so-called buy and hold portfolio. So you buy some stocks that are that are not very risky, and you can hold them for, let's say, for 3 to 5 years. So that, because if you trade them, probably you're gonna pay quite a lot of transaction costs, and you don't want that.
Yeah.
So get yourself a good buy and hold portfolio of decent dividend-paying quality companies is a good idea for the long run.
Okay.
Yeah.
Okay.
And so diversify somewhat in gold. Diversify somewhat into cryptos, Bitcoin, yeah. And you have even other. If you are really it also depends on your own taste. For example, if you are an art lover or something, I think art is going to do quite well. And you see already the art market doing quite well. And you enjoy the art, and it will also increase in value.
Okay.
Yeah. Some people invest in other things, like you have these alternative funds. It can either be hedge funds or private equity. Those really, high finance, haute finance investor, asset classes. Niche. But it can also be art. But sometimes people invest in old whiskies.
Right.
And they invest in old wines. And they can be traded in, for example, at they can be how do you call it, auctions. Yeah, those are also, and yeah.
Okay.
Yeah.
Okay.
Interesting. Art.
Yeah.
Let's invest in art.
In wine. No.
By a rapper. Yeah.
All right. Jordan, I know we had a few technological breakdowns during the session, but I think you brought in a lot of useful and valuable information to our viewers and listeners. So we want to thank you for that. I don't know if you have last few words that you wanna, words of wisdom that you want to share with our viewers and listeners in regards to this topic and things that they should be considering going forward, and that would be appreciated.
Yeah, no, it was my pleasure. Thanks for inviting me. If you want know more about investing, then always welcome at the Investment Club.
Okay.
So it's a
Tuesday, right?
8 p.m.
Tuesday, 8 p.m. Every first Tuesday of the month.
First Tuesday of the month. So there you go.
Send me an email and then.
Right.
Yeah,
Okay.
we'll
Cool.
make sure.
Okay.
Mhm.
Yeah.
We'll make sure to stop by one of these Tuesdays.
Yeah.
Yeah. Welcome.
Anything else you want to share?
Well, thank you very much for inviting me. It was an honor.
Okay.
And if there are some other things coming up, then let me know.
No.
This was very informative. I gotta say. I mean, the wide area of information that is available on this topic it's immense. So it takes a lot of research. It takes a lot of time. But I mean, the end result that you could potentially get out of it is big.
Right.
Let me just use that word.
No, definitely. And I think the main point that we got out of here is that it's not only savings that exist as personal investments. There's more avenues, there's more asset classes that you can delve into. By the same token, based on this discussion, I think that's why I liked having these discussions, because it gives you ideas, or it identifies gaps in terms of what could still be an option to individuals or corporations or entrepreneurs and whatnot. We were talking about, linking markets between investors and people who need funding. Availability to buy and sell equities and bonds and whatnot. That's not really available easily at this point of time. So I like seeing those gaps, and maybe this becomes a platform, an idea that somebody else makes it happen.
Yeah.
And that makes it this whole conversation, separate from the information, a whole lot more interesting. Yeah. So, Jora, thank you for your time.
Thank you.
First of all, thanks for all the information. Very much appreciated. We are very satisfied to have you here on FLORIN Talk. You are part of the episode number 4 of our second season. So you're part of history too.
Okay.
Randy, thanks for everything. Thanks for a valuable contribution. To the viewers and listeners, thank you for tuning in. I know we had some technological breakdowns today, but like I said, the third time was a charm, so we were able to finish our show today. Thanks for tuning in. Hopefully the information was valuable to you, and we are looking forward to having you next week again. We are here every Tuesday, 6 p.m. I'm going to switch now back to Papier Minutes so I can do the closing statement for the sponsors and everything. So, en verdad, tu llamar 6 horas, FLORIN Talk, tá aqui na riba a plataforma de Sopi Mix. Nós temos que agradecer a sponsor na cuidar aqui possível. Cuida Sopi, SwingMasterz e Qredits. Naturalmente, FLORIN Talk, te worden patronizado door de Monarch CPA LLC, the 21st Century Accountants. Once again, thank you. Y nos toca otro simang. All right, we sign out. Thank you.
All right.